morning, everybody. Today is March 9th, 2020, Monday, and we are having a happy Monday, but it's only happy for people who short the market. This is why I have the sign here, because the stock market was actually, New York Stock Exchange was halted today because when it opened, it collapsed because it was down like minus 1,500 points or even more, and there is a mechanism that basically shuts down or holds the trading in order to avoid what they call catastrophic losses for investors. So it gives people an ability to kind of like cool down, rethink their positions, maybe retrieve their sell orders if they're in panic. But the main idea is that coronavirus is really affecting the economy. It's really affecting the stock market. But I actually find it very good news for investors if you are on the right side of the market. Basically, here's the situation. On the market, you could make money when the stock market actually goes down, or even better, collapses. For that, there's an instrument called first of all, short selling, when you borrow the shares from your broker, and at the current price, let's say the stock is trading at $100 a share, and you sell it at the market at $100 a share, and when the next day the stock market opens and the same shares are trading, let's say at $80 a share, you actually buy these 100 shares and return them to the broker, but you buy them at only $80 a share, or $8,000. So you sold 100 shares at $100. You received $100 you received $10,000 in cash. Then the next day, out of this $10,000, you spend only $8,000 to buy those shares back and return your debt to your broker. And the difference is 10,000 minus 8,000 is 2,000 is yours. Well, that's the most primitive way to play the down market, but a more efficient way is to buy put options. Put options basically allow you to sell a security such as a stock or ETF at a fixed price for during the fixed amount of time. For example, you could buy a put option with an expiration for next Friday. So basically, like 5 days from now. And what happens is that you have the right to sell a stock at $100. Again, the stock goes to $80, and your put option appreciates maybe 100%, because now, you bought this right for, let's say, $1, and now this right will cost the new investor already $2, because it gives you already instant profit. In fact, it will cost you not $1, but it will cost the new investor already $20, because if you have a put option with a strike price of $100, or basically allows you to sell a stock at $100, and the stock is trading at $80, then your put option will automatically cost $20 or more. Why? Because you could buy a share on the open market for $80 and then sell it at $100, because you have this option which allows you to do that. So what I'm saying is that coronavirus in its current state probably will not be stopped anytime soon, in a sense of number of infected people and number of dead people. And it looks like the vaccine or antiviral medication for coronavirus will be invented probably in a matter of weeks to months. During this time, the only real protection that we have is quarantine, or using face masks, or using you know, some kind of like work from home setup. But basically, because there's no cure for coronavirus, and it has very high rate of contagiousy, that means that the number of people, the number of infected people will grow, and probably the number of dead people as well. So in light of this more or less predictable result for coronavirus outcome, at least for the next few weeks to a few months till they find a cure, we could say that the bad news would be arriving to the market pretty much every day, and every day the investors would be unloading their shares and trying to escape the stock market. So, and if you agree with that, then what you could do is you know, find blue chip stocks, the ones, for example, that traded as part of Dow Jones Industrial Average Index, and I'm talking about 30 blue chip stocks that you know, that are included in this index, such as IBM, such as Microsoft, Intel, Procter & Gamble, Pfizer, Merck. So all these companies, well, except for Pfizer and Merck, because these are pharmaceutical companies, and you know, they might be going up because they might start releasing some news that they have a cure or working on it. So but if we're talking about straight kind of like, let's say, technology stocks, these guys would be going down because coronavirus kind of affects them directly, and they really don't manufacture any kind of cure for it, so they would not get any kind of boost till somebody invents antiviral or vaccine for this disease, so for this virus. So and frankly, for investors, if you could predict something with pretty high accuracy, this is your golden ticket to become rich, because so far the coronavirus was very predictable in a sense of how deadly it is and how it could infect a lot of people. Now we have 107,000 people infected. So if you would like to know which stocks to short, on which stocks to buy the put option, go to the website, to stx.com. It will take you directly to the Apple App Store, where you could download, install, and run my application on your iPhone, iPad, and Apple TV. And it will give you buy and mainly sell recommendations for 5,500 stocks. Thank you for your time. Stay safe, stay healthy, and good luck trading.